Alright, first things first, what we're going to do is we're going to take a look at our hot chart just to see what portfolio has performed the best over the past 12 months. And looking right away at this thing, I'm looking at all this nice green here. Gives me an average of 1.88% per month. And then you have this dividend portfolio, which actually beat out everyone for November. Average is 2%. So we're going to kind of just look down the list and see if we see anything a bit greener, and then we'll check the number to see if anything comes close to 2%. Now, typically, when the dividend portfolio is best in show, the reason being is because the market is taking a downturn, and so investors typically invest in companies with a nice dividend, because with a dividend you literally get paid to just wait for the market to come back, right? And so there's a very good chance that that is what's happening. So I looked through, I don't see anything. There was one that was kind of green, but it was not even close to that 2%. That one is 1%. So what we're gonna look at too, just to make sure, what is this one? This one is 9. Okay, yeah, it's 0.19. So what I'm gonna do is I'm gonna look and see what companies are here that cause this huge average. And I'm concerned about this month and this month, because what we don't want is we don't want just one fluke company, right, that created this huge increase, and that's what gave us, our high average. So again, we're looking at December. We're going to look at April. Right, here we go. So December and April. All right. CenturyLink, we noticed CenturyLink has been doing really well. That is a telco. Energy Transfer Partners, Annaly, Seagate, Blackstone, GE, Southern Utility, Victoria's Secret, L Brands, and then Philip Morris. I'm really hoping that we can get into Philip Morris. I love that company, and the dividend is great. All right, so that's December, and I just want to point out here, I feel pretty good about this because, Annaly, BX, GE, these are companies that we're currently invested in. So let's look at April now. All right, so we got MetLife, we got Seagate, SEP, GE, HST, International Paper, Philip Morris, Merck, and again we got CenturyLink. And American Electric Power. We're also going to take a look at portfolios here. This is assuming that we purchased these stocks last year and just simply held them for the entire year. Let's see what we get here. So 8, 12, 33. So far 12 is the biggest. Yeah, looks like 12 is the biggest. Alright. And so what I'm looking at here, just so you know, the average return minus the standard deviation plus the total return. Alright, so it's a combination of returns and volatility. Alright, if we look at just the raw return, see 1286, 1487. See, looking at the raw total return will tell us what the biggest return was, but the problem is over the past year that number could have gone way up or way down, right? And so that's the reason why we have the volatility as well as the average return kind of factored into that calculation. But it looks like regardless of volatility, the largest raw return is also going to be our largest overall return too, which is our number here, the 12%. And this is beta. And if you recall, beta is calculated based on how the company performs when the stock market is in a downturn. So, I mean, that makes perfect sense, right? Over the past 12 months, clearly the market has been in a downturn, and so companies that perform best in a downturn are going to win. All right. So what we're going to be looking at here is we're going to be looking at the dividend portfolio and those companies in it, as well as the beta portfolio. All right. As far as what we look for as far as replacing stocks. I want to take a quick look at our sectors here. So this is the past month. Basic materials down 15%. Consumer goods up slightly. Consumer defensive down. Energy way down. Financials way down. Health way down. Industrials way down. Real estate up slightly. Tech way down. Telcos down slightly. Utilities down slightly. So what does this tell us? What sectors of the economy are doing best, right? So we have utilities, which are down a little bit. We have real estate, which has come up some, and we have, what else we have here? We have consumer durables. Consumer cyclicals. All right. Now I'm curious as to what's in this consumer cyclical here. The reason why is because consumer cyclicals typically do well when the economy is doing well, and so you see companies like Ford, Las Vegas Sands, which is casinos. We see Macy's, International Paper, which I never quite understood why that's consumer cyclical. Genuine Parts, it's the auto parts, right? And then Hasbro, which is what we're in right now. Again, I can't imagine why they're doing well. Maybe it's a fluke, but either way, it looks like utilities actually beat everyone out. Real estate beat everyone out, and that makes a lot of sense. Okay, real estate is one of those. How do I explain? It's like a utility, right? Because real estate typically buys property and it sits on that property and it collects dividends. It collects money from that property, and so unless you're dealing with a company that's using a lot of leverage, which means a lot of loans and stuff like that, then they're going to do well in times when the market is not doing so well. Annaly is kind of a different animal, right? Annaly doesn't own any property. Annaly simply owns the mortgages, so it acts really more like a bank than it does a real estate company. But because they are primarily and specifically involved with mortgages, they're classified in the real estate sector. Okay, and so that's what's going on there. Over the past, let's see, we can pull this out here. There we go. Over the past couple months, Annaly, like I said, it's come down quite a bit. This VTR, they are the MVP right now of the sector. They've done fairly well. Looks like O, which I don't know a whole lot about, has actually been best in class as far as average return goes, and that's over the past 12 months. So we're not in the market right now for real estate. We will look at possibly buying some more Annaly, at least continue trading around our position, and then I'm going to be careful about getting into an industrial name. Like I said, we have to replace our General Electric, but we're going to be careful about doing so because it looks like the rest of that sector is just not doing so well right now. Looks like EMR and Waste Management um, have the best average return. IEP, no, I'm sorry, IEP actually has the best average return. So yeah, we'll continue looking at that and see what happens.